Well, it depends on which gas market you're looking at. If it's the global gas market, I think the answer is probably not. And if it's the U.S. gas market, I think it depends heavily on what the global gas market does. We have a very, very tight global market, and it's feeding straight through into U.S. nat gas. If the winter turns out to be pretty cold, it's going to get messy. We're going to be running on very tight supplies in Asia and Europe, and that's going to feed straight through into NYMEX prices in the U.S. That's our view.
You know, if you can translate into what this means for consumers and businesses, you know, we're all looking at the headlines in Europe where you have some providers who are refusing new customers, where you have some who, you know, these economics are terrible because there's a cap on bills to households, and yet they're completely exposed to the rising input prices, and some are going under and they're trying to figure out, you know, what to do in terms of bailouts. How much of that could happen here?
Well, I think in terms of the U.S., it's not very likely that we have the same situation. There is a number of buffers that will most likely prevent a run-up in prices like we've seen globally. Remember, Europe is short gas. The suppliers of gas traditionally have been Britain, the Netherlands, and Norway. And now Europe has become very dependent on Russian gas. And there is no liquid natural gas out there because it's all being taken by China. So the Europeans are basically having to shut down factories. We've seen that in the UK in terms of fertilizer companies. There's a pass-through effect already into the meat production business because there's a shortage of CO2, which comes directly from natural gas. And I think we could see other industries being impacted. And of course, then there is the winter. I mean, if we have a cold winter, things are going to get messy. Inventories are just too low. Now, in the U.S., you don't have the same situation. There's a number of buffers that will prevent prices from getting a lot higher than where they are today. I mean, I think we could see, in a bad winter, we could see $8-10 per MMBTU,
wow.
But it's going to be unlikely that we go a lot higher than that. Remember, in Europe, they're paying 25, right? So it's still meaningfully cheaper than what you're seeing in Europe and Asia right now, which is about $150 a barrel of oil equivalent, higher than what we saw in the financial crisis back in 2008. So extremely high prices.
So there's so many more questions that I have in terms of whether we are going to face outright shortages. You know, we've seen some sort of startling headlines about, as you mentioned, fertilizer, food supplies, and that kind of thing. What would you say to those who are rather alarmist about the present situation? And what would you say to those in the U.S. who, if you think we're relatively more protected from this, still how might we expect this to behave headed into kind of the spring of next year?
Well, look, I think the advantage of the U.S. is that you have a very, very large domestic shale gas business. So I think if the price is right, we'll see investment coming back into the sector. We'll see more production. In fact, we expect growth of 3.5 billion cubic feet of supply in the U.S. next year. The issue in the U.S. this year has been that all the exports to Mexico and all the liquid natural gas demand being exported also internationally has tightened up domestic supplies. But the U.S. historically has been a bit of a gas island. There's a lot of supply. You just need to drill it and get it into the market. Internationally, it's much more complicated than that. And so I'm not that worried about the U.S. In fact, I think on a relative basis, this situation benefits U.S. and U.S. businesses, as people will see America as a place where even though gas prices are higher than what they were last year, they're still way, way lower than what they are elsewhere. So I think the U.S. is in a relatively better position. Now, Europe, I don't know. I think it's a challenge where Europe is. And ultimately, it's all about Russia opening up the taps and releasing more gas into the continent.
Yeah, it's almost like they're the OPEC, you know, just themselves of this vital energy source.
They are.
So I just want maybe to get your thoughts on some of the clean energy commodity plays and that kind of thing. You know, I wrote earlier about Pierre Andron, who has basically said he's not long oil for this phase of the transition, that he thinks this is all kind of going to hasten its own demise. And again, this government transition is partly why we're facing these shortages and price spikes right now. Can you just explain that dynamic from your point of view? How do you see that playing out, and where do you think commodities are best positioned for investors to go long?
Well, I think at the moment there's two big stories going on. One is the winter and the winter fears, right? And clearly gas is going up on the back of that, and potentially we could see oil prices going up too. So we do think there's a risk of oil being dragged up higher by natural gas, and maybe we see $100 a barrel this winter if gas keeps spiking, just out of substitution. And then Then I think the other side of the commodity story is the industrial metals and the bulk commodities. That's a more challenging story. Again, this is connected to the Evergrande fallout in China. Remember, the property sector is almost 30% of GDP in China. So we are worried that some of the construction materials, some of the commodities heavily utilized in the construction sector start taking a hit. And we've seen it already with iron ore in particular, as China has been shutting down some steel mills. And it could happen also in some of the other metals, maybe copper, maybe some of the other metals where China's 50% of the world's market. So I think commodities right now, I mean, I'm more constructive on the energy side. I'm a little more concerned about the industrial metals and bulks heading into the winter.
Shepard Smith here. Thanks for watching CNBC on YouTube.